We bring you the billionaire investors, Sam Zell, and Nikuj had an exclusive interaction with him talking about how the world is going to change post-COVID and where is he finding investment opportunities.
It's your first time on Indian television, so very warm welcome to you on behalf of ET Now.
Thank you.
What is your view of the world right now, sir? Lot of moving parts, medical crisis, economic crisis, social crisis. What's your read of the world?
Well, it's hard to answer your question. Frankly, if I knew the answer, I could take advantage of it. I think the world is a little screwed up. I think we're confronting a lot of problems in a lot of places, kind of all at the same time. I think that none of them are what I would consider to be threatening in nature. I think the pandemic, the response to the pandemic worldwide has been both responsible and relatively reasonable, with just a few exceptions. I think that overall, the solution to the pandemic has been basically isolation, and the world has been isolated for quite some time. And I think the problems that we're seeing on the streets of the United States today are as much a response to the ultimate issue of equality as it is a response to people being locked up for a long period of time. I think it's unrealistic to assume that we're going to have a V kind of recovery. I think at best we might have a U kind of a recovery, to put this in terms of letters. But I really believe that there has not been a radical change in conditions. And I think that although we'll have a short-term employment issue, I think that by the end of the year, we will be back to more reasonable levels of unemployment, not the kind of tight labor market we had prior to the pandemic, but certainly a level of unemployment that we will be able to handle and will get better as time goes forward.
Sam, you've mastered the art of understanding cycles, and you've made a fortune by understanding the market cycles. So in your mind, what is the market cycle we are in? And do you think globally, especially United States and even emerging markets like India, are public markets disconnected with the reality? And if they are, why?
Well, I think that, if given a choice, I think that there's a tendency to try and make markets reflect how we feel. The reality is that markets act independently. Obviously, despite the pandemic and despite social unrest, the U.S. stock market has recovered almost completely from what occurred when the pandemic began. I think that reflects the fact that, generally speaking, people are viewing these events as short-term dislocations rather than major changes. I think markets are likely to settle. I don't think they can continue to rise at the level that they're rising, but I also don't think that we're going to see a depression or anything like that. but I think it's going to take quite a while and I measure quite a while as 6 months to a year before we recover from the trauma of sheltering in place and dealing with a pandemic that the whole world has been dealing with at the same time.
In some of your work, which I've read and which I've followed, and when I watch your global interviews, Sam, you've said that there is a bubble and then there is a recovery, which is that markets first will follow a cycle, then earnings will go down, then bankruptcies will start, and then risk capital will start coming back. And that's the time when Sam Zell historically has invested, when you had a positive view of the economy. But of late on global media, you've been saying that you're worried. Why the optimistic in you currently is not feeling like a kid in a candy store?
Well, I think that, ever since the pandemic occurred, I've received, numerous phone calls, people calling me and saying, Sam, you're the grave dancer. You're the guy who historically has taken advantage of cycles and taken advantage of, over pessimism. I'm more than willing to be the grave dancer again. What I don't see is the opportunities to do so. I don't think people are responding or institutions are responding very rapidly, but instead are slowly kind of digesting what's going on. To the extent that there will be opportunities, and I suspect there will be, I think we will see them come forward in a much slower fashion than perhaps what we have seen in the past.
Sam, as a group, you've got interest in real estate, hospitality, transportation, infrastructure. What is the sense you're getting when you look at all your businesses? Which are the businesses you think will survive, and which are the businesses you think will come out stronger?
Well, I think that, you ask a question that's so broad, I think I have to define it in order to answer it. So, for example, I think real estate, parts of real estate are going to perform very well and come back very strongly. I'm very positive about the residential side of real estate. I think multifamily, I think manufactured homes are all places where there is significant and growing demand, and I think they will perform very well going forward. At the same time, retail looks a lot more like a falling knife. And I think we're all sitting here saying, how far down is it going to go? Certainly the experience of being sheltered in place for 2.5 months and thereby forced to shop online and do our banking online and deal with, online more than we would have otherwise done is going to have accelerate that portion of our world that would otherwise be slowly moving online. So, for example, in the United States, about 13% of our retail sales as of January 1st were online. And there was an expectation that over the next 6 or 7 years, we would move from 13 to 30. I think now it's very likely that we'll reach 30 much quicker. A lot of people who would view online shopping or online banking or online activity as a little esoteric for them or a little too techy for them have been forced to act accordingly. So we've seen, an increase in online that I don't think is going to change. And I think people have learned how to handle that. As far as office space is concerned, there's a lot of speculation that sheltering in place is going to change office space usage. I'm relatively skeptical of that. As I said to somebody recently, I don't know how to motivate by modem. And so consequently, yes, we've done pretty well acting remotely, but we started with a community. We started with knowing who the people were. We started with having a pretty good perception of what their capabilities were. And so therefore, working remote with a group of people for a 2 or 3 month period is a long way different from attempting to assume that we're all going to operate remotely in the future. I also think we're social beings, and we want to work together, and we want to interface together. And I know I miss not interfacing directly with people. I mean, as nice as it is to talk to you on Zoom, I don't get the same impressions by talking to you on Zoom than I would get if I talked to you personally. So I think that, all of this discussion about, office space is going to disappear because everybody's going to operate remotely, I don't think is very likely. Is it likely that people will operate remotely maybe one day a week? Possibly. Should that change the demand for office space? Not significantly. So I think that, we're likely, and then people say, oh my God, people are going to want to move out of the city. Well, that sounds good, but it isn't very practical. And so I think that after we get through pontificating about that which isn't realistic, I think we're going to go back to realizing that there's benefits of scale, there's benefits of people working together, there's benefits of businesses that can communicate within their own offices. And I think we'll see a lesser impact going forward, certainly than the savants are currently predicting. In some other areas like cell towers, like warehousing, I don't see any, if anything, I see demand increasing for them. And so I think real estate is likely to basically be relatively benign in upcoming environment. As far as other areas are concerned, I think there are obviously going to be changes. I don't think we know what they are. The whole movement toward solar power and wind power and reduction in fossil fuels is something we can't lose sight of. But we also can't make assumptions that this is going to happen overnight. And I think to some extent, we've seen people responding as though it were going to happen overnight. And instead, it's going to happen over 30 or 40 years. And that means there's going to be a lot of opportunities in between. I think one of the areas that interests me most, and we're spending a lot of time studying, is logistics. I think the ability to move things and the ability to interface within communities is going to be different than it was before. And there's going to be greater opportunity. I also think that there's going to be a lessening of focus on globalization. I think we've all learned some pretty painful lessons that extended supply chains create significantly greater risk than I think we were ever willing to focus on. In the same manner, I think that, we've been operating for the last few years, or for the last 10 or 15 years, on the theory that the only thing that's important is make it cheaper. I don't think that's going to continue forward. I think we've learned some serious lessons about that. And I think we're going to see more local production. I think you're going to see more stuff brought back to the United States. I think that, some of the remote stuff that India has been particularly effective at doing, I think the demand for that is likely to decrease as we reorient the way the world is working.
Has India ever occurred to you as a land of opportunity where you want to invest directly or indirectly?
We have invested in India. I wouldn't call it having been a terrific experience. The legal system in India leaves a lot to be desired. I tell people that we invest in the emerging markets where we trade growth for the rule of law. Somehow or other, India takes that kind of one step further, and the rule of law becomes further and further away, and time frame becomes more and more difficult. Good businessmen and good business activities depend on the ability to resolve things. India seems to be designed not to resolve things. And so therefore it makes it a less attractive environment to allocate capital when there's no way to accelerate or no way to predict a time frame for resolution of difficulties.
So what will it take to convince you personally and your firm personally to come back to India and start investing again?
I think that, we're always attracted to countries and areas where things are predictable, where I can predict how long it'll take to get something done, where I can predict if we have to go to court, what a reasonable time is. I don't think India can provide those answers today, and certainly has not done so historically. But it's certainty, or as close to certainty as possible, that attracts capital. And it's uncertainty that makes you look other places.
Sam, investing is like allocating capital or positioning your capital to benefit from future trends. The future is uncertain. Risk is back on the table. So how does one go about investing right now?
Well, it's for sure a challenge. No question that allocation is the critical element. And, more than anything else, my job is the allocation of capital. I think going forward, we have to look at a whole bunch of criteria that affect your thinking. Obviously, as we just mentioned, rule of law is very important. Equally important is demographics. And certainly demographics is an area where India has a benefit against most of the rest of the world. Demographics translate into demand. And ultimately, as an investor, more than anything else, you're looking for demand and the ability to use capital to provide answers to that demand. And that's the way we look at investments. We also look for environments where there is an existing entrepreneurial class for whom we can provide capital. I don't think that we believe that going into a place like India or other emerging markets, if you use the expression naked, makes a lot of sense. And so to a large extent, it's important to be able to tap into a local entrepreneurial class that is both competent, has their own capital, and is welcoming to third parties.
Do you worry about the shape of the world changing because of this crisis? Blame game could start. It could be between the Americans and the Chinese, or between some other countries. But globalization, which has been a large reason for global growth, now can get jammed. Is that a worry for you?
Well, I think that there has been, I think you're asking two questions, and I can't need to separate the Chinese part of your question from the rest of it. When China was admitted to the WTO, I think it was 2002. I think the assumption was that China would prosper and grow and take advantage of access to the rest of the market and become more of a globalist and, in effect, thereby benefiting for themselves as well as benefiting the customers and the countries that they dealt with. To a large extent, China has been much more of a mercantilistic partner, taking advantage of the situation, but not providing the benefit to the other countries. I don't think that's sustainable over any period of time. And I think that there needs to be a change in attitude and perspective on the Chinese part that says if you want the benefits of a global world, you have to be a participant in the global world as well. As it relates to the rest of the world, I mean, and by the way, maybe we have to go through a period of hypertension before that message, gets delivered. I don't know the answer to that at this point, but clearly, we being the Western world, I think, was much slower in responding to China than we should have been. Many of the things that are occurring right now with reference to China's relations with the rest of the world probably should have occurred 10 years ago. And we would be in a much better position today for everybody to deal with it. As far as the rest of the world is concerned, I would only make one comment, and that is that there is a shortage of leadership. There is a shortage of leaders operating by example. That's not good for the world, and that's not good for the evolution of a global economic, benefited world. And I think we need to, emphasize and work on developing and creating a better leadership class with a much greater responsibility to their people. When you read Lee Kuan Yew, who wrote extensively on this and dealt with creating in Singapore a pretty extraordinary environment, he emphasized the fact that it's unrealistic to think that you could compensate leaders as though they weren't and expect them to be leaders. We need to compensate them. We need to create a leadership class that is no different than a CEO class who have an intent on creating benefits for the whole country and ultimately for the whole world.
Sam, it's a rare pleasure for us in India to get an interaction with you. So allow me to take the clock back and ask you questions about your life. What makes Sam Zell such a great investor? You had humble beginnings. You are a child of immigrant parents. Yet you made a very successful career by investing. And investing, we all know, is a very complex thing. What makes you such a great investor and an original thinker?
First of all, if I knew the answer to that, I'd be rich. But I think the answer is that it starts with the word fear. I think that all of my career, I basically believed that I could suffer through being too successful and still do fine. But if I misevaluated the risks and, in effect went down an elevator shaft, there'd be no future for me. So I think that emphasis on the downside, emphasis on understanding the limits of what can be done, I think has been a very, critical part of my ability to do that. I think that since I've been a young child, I've had an enormous self-confidence that I'm not sure I could explain to you why I had it, but I've always had it, and therefore been willing to make decisions and make allocations predicated on how I believed, not necessarily how conventional wisdom was perpetrated. You don't achieve above the mean if you do everything the same as everybody else. And you've got to be able to identify ideas and directions that reflect what you believe, even if conventional wisdom doesn't go along with you. I've spent my whole life listening to people explain to me that I didn't get it. And it's been very hard many times to say, I believe I do, and we have a difference of opinion. In the time that I spent buying up distressed assets, which I've done a lot of in my life, there have been many times when I've sat there and I've looked over my shoulder and I've said, why isn't everybody else following me? Maybe I'm wrong. And being forced to think like that all the time, I think makes you a much better allocator of capital and a much better risk taker because you recognize the fact that you're operating differently than other people.
Why do you think investing is simple but not easy?
You're the one who said it was simple, not me. I think investing is very complex. I think it requires a very broad understanding of what's going on. I can't tell you that, as an individual, I'm constantly reading and constantly attempting to broaden my knowledge because I find that whether I'm looking at real estate or I'm looking at energy or I'm looking at logistics, the broader my general knowledge of everything going on, the better able I am to challenge the assumptions. And that's really critical.
Yeah. So if you have to give an advice to someone to start investing afresh, where do you think the growth highway is there for next 10 to 15 years? And I want to just bring this point out for our viewers that you mentioned again and again on various forums that as a child, you have been told that America was the land of opportunity. So where is that land of opportunity according to you?
Well, I think that there are obviously a lot of potential lands of opportunity. In order for lands of opportunity to exist, you need a lot of flexibility. You need a lot of predictability. Uncertainty is your enemy. We started out in real estate, and today real estate represents 30% of our world, and 70% of our world is everything else. And we've constantly thought about how things are moving and how people are responding and how communities are responding and what the general flavor of the country or the community is, and attempting to find ways to service those desires. Identifying trends is a critical part of the whole process. And although, people don't invest in markets, people invest in transactions. And there are times when you might invest in areas that are not growing, but the price of entry is so low that it makes up for the fact that there's very little growth. So you got to analyze each individual opportunity in that fashion rather than saying, well, the market is going this way. Because if you invest in markets, then you're investing with the herd. And the way in which you create capital and create wealth is by investing against the herd.
So I'll not extend my appointment with you. So last question, if Sam Zell in 2020 has to write a letter to Sam Zell of 1980, how will the letter start and how will the letter end?
That's a very good question. I think that I think the letter would start by saying that, we've been through a lot of different crises, and we've kept our sanity and kept our net worth in line without taking undue risks. We haven't bet the farm. We've been very diverse. And I'd recommend to the future Sam Zells that diversity and spreading the risk is critically important. As smart as we think we are, we're not smart enough to not make mistakes. And recognizing that we're all capable of making mistakes, we have to create an environment where we can make mistakes and survive.
I'm tempted to ask you one more follow-up question, and if you allow me to do that, which is that in this lockdown or the quarantine, what has been your most painful moment and what has been your most joyful moment?
Well, it's a very good question. The thing that has made me the most proud and interested is the way in which everybody has interfaced, the way in which everybody has been willing to change the way they function every day to create the optimum amount of productivity. I think when history looks back at this period, we're going to find that the productivity which you would have expected would have decreased may in fact have increased. At the same time, lockdowns are not healthy for society, and they're not healthy for anybody. And I think that the current unrest is as much a function of previous rights and wrongs that may be responded to, and the fact that people have been sitting at home for the past 3 months, and coming out, they came out with a lot of anger and a lot of frustration about being cooped up for that long a period of time, and concerned about, social distancing and all of the elements necessary to break the curve.
Well, sir, it's been such a great pleasure interacting with you in India. Well, we always, say thank you by folding hands. So thank you for your time and look forward to interacting much more of you going forward.